I have a question for you. Do you want your investment portfolio behind the wheel at Ford Motor Company? Let's discuss it. Everybody knows Ford Motor Company. It's one of the automotive giants around the world, mostly in the United States. Its market share, however, lags behind not only General Motors, but some of the foreign brands, Toyota, Nissan, some of the big names that we all know. But Ford Motor Company is a compelling story. It's a stock that we can look at, and maybe it's something that you want to add to your portfolio. Let's have a look at the numbers. You can see right over here, it trades at about $12 a share. Is $12 expensive? In many ways, it's not expensive. The yield on this stock, so while you're waiting, the dividend that Ford Motor Company pays you is about 5–6%. Excellent. Is it an expensive stock? Ford is not an expensive stock. The PE is about 6 times earnings. So why is it so cheap? Why are more investors not jumping on the back of a Ford pickup? The answer is that the automotive business is wildly cyclical. One moment everybody wants pickup trucks or SUVs, the next moment they want compacts or electric cars. So you're in the automotive business where the costs of capital are huge to invest in new production lines. At the same time, fashions change. One moment everybody wants a big truck, next minute now they want a small imported car. Very hard for automotive makers like Ford, like General Motors, to keep up with the fashion part of the car business. Next for Ford is cyclical business. The cost of entry, that means foreign manufacturers of cars, they can get in and compete. They can send over a $22,000 sedan and people want it. So Ford, while the numbers I think have been relatively great, not just good, the profitability of Ford has been excellent. They've been able to pay down some of the debt. Debt is always a problem with these car companies. And keep in mind that in North America, it's one of the big three. You've got Chrysler, you've got General Motors, and you've got Ford. What are their brands? You know the Lincoln, you know some of the others, Fiesta, and some of they're going obviously more toward electronic cars and more fuel-efficient cars. But what's in Ford's favor? You've got low price of gas, you've got cheap money, and you've got a relatively, I know not in the last couple of weeks, but a relatively robust economy, adding jobs every month. People are feeling a little more comfortable about spending on capital expenditures like a car, and maybe they pick a Ford. The downside is, sorry to say it, but cars are more commodities than they ever were in the past. So yes, it's nice that Ford makes a nice Lincoln, but the competition has a lot of Lincolns too. Do you want to have this? I think Ford is a compelling story. At $10 a share, I would have no hesitation saying add a little to your portfolio. And maybe it'll be a rough ride, but in the long run, I think you'll like where you go. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.